Hey everyone, me Kevin here. The latest data is out on Tesla's vehicle deliveries, released just minutes ago. We have a new report on how many vehicles Tesla was able to produce and deliver in Q4 2020. Now keep in mind there were a few big expectations here. Number one, Wall Street was expecting 176,000 vehicles to be delivered, but in a last-minute push to get over 500,000 vehicles delivered in 2020, Elon Musk in the last 3 days of 2020 even offered people a free 1-year access to the full self-driving system, which usually costs $10,000 as a standalone upgrade, if they would just please take delivery of the vehicle they purchased in 2021, even if that means taking delivery at 1 a.m. Yes, that was actually a snippet that somebody actually complained about, which I thought that would be pretty cool. That'd be a story to take delivery at 1 a.m. But anyway, let's go ahead and take a look at the numbers and see what Tesla did. Let's talk about the potential consequences. Here we go, figures just released, Q4 2020 vehicle production and deliveries. We've got 180,570 deliveries. This is a beat. This should be very good for Tesla's earnings going forward. This is a beat on Wall Street expectations, and some could argue that maybe this would actually help push the Tesla stock price up even further and closer to the moon. However, unfortunately for Tesla, let's go ahead and put this together here. What I've done is I put together a spreadsheet showing us that we have a total of 509,000 vehicles produced for 2020, but just 450 vehicles shy of that psychological 500 vehicles delivered. Now, we do have Tesla and other news outlets reporting that Tesla has delivered 500,000 cars. They're doing a little bit of rounding up, and maybe they're taking an average here because they're saying we produced and delivered 500,000 cars, so they're taking some liberties here. But I have to say, the fact that Tesla did basically get to 500,000 vehicles produced is wonderful. It's a slight miss on sort of that emotional, that psychological threshold. We did get those 180,000 vehicles delivered though, which is great. One thing that I thought was actually very interesting is we have a new push here on the Model S and X, and this could be a reaction to potentially the new price cuts, which is actually a good thing because, see, even though we're cutting the price on the S and X, the more S and X vehicles produced and delivered we have, the higher that vehicular margin can be because the Model 3 is slightly lower margins than the S and X, especially since the S and X technology, it's like, hey, it's there, the vehicle's able to be produced, but deliveries have actually kind of been on a bumpy road for those. Take a look at this. If we go to Q1 2019, we're at 14,000, we go up to 17,000, then we go down a little bit on the S and X, consistently up on the Model 3 here, obviously. Again, consistently up on the Model 3. Then we get this high point for S and X deliveries of around 19,450. Still never really getting to that, 20,000 figure here. Once the Model Y gets introduced, we can really see here S and X kind of just drop off a cliff. We're down to 12,200 in Q1 2020. Now, you actually also see this drop off here in Q1 2020 for Model 3 and Y deliveries. Some of this had to do with COVID. Some of this also has to do with just the end of the year rush that you tend to see for vehicle purchases, so people can lock in those tax credits. And so we can see this gradual kind of growing back here after the COVID beginnings, so to speak. But the fact that we're now nicely climbing on those S and X deliveries back to that 20,000 target, probably not going to see it in Q1 2021, mostly because, again, the incentives are generally push purchases towards the end of the year for the tax incentives, especially on EVs. But for 3 and Y to be up here at 161, really, really good. I mean, this is excellent news for Tesla, especially with the Model Y coming in China as well. China can produce vehicles a little bit more inexpensively than we can here in the United States, so that also helps Tesla boost its margin. Overall, really good. Leases holding stable, right around 7 to 8%. We did expect for a period of time that this might actually continue to decline in Q2 2020. We saw this kind of go down from 8% to 5%. It's actually bumping back up, which is interesting. I always feel like for EVs, most people are going to be more inclined to buy these to take advantage of all the tax breaks that they can get regarding actually owning and buying an electric vehicle. This is why, when you look at like Mercedes or BMW, they're much closer to like 45% of their vehicles going out in leases as compared to, 8% here. So still substantially low in terms of leases, most of these being purchases. Overall, I think this is great news for Tesla. In terms of sort of stock price reaction here, what are we thinking for Monday? We beat Wall Street estimates here, so it's very likely we could see some solid green on Monday at the open for Tesla stock. Now, if Tesla falls because we missed that $500,000 marker, or 500,000 vehicle delivery marker, I personally think it becomes a little bit of a buying opportunity. There was a lot of hype around, Tesla for sure is going to do 505, they're going to do 510, they're going to do 503. None of that really matters though. So to me, the difference of 1,000 cars here, 1,000 cars there, I don't care. This company, in my opinion, is a company we want to look at delivering somewhere around 500,000 vehicles a quarter very soon. Forget about 500,000 vehicles in a year. In 2-3 years from now, we should be at 5, 6, 7, 800,000 vehicles per quarter. So 1,000 here, 1,000 there, doesn't matter. If there's an opportunity to buy Tesla on a little dip, you almost want to grab Tesla on any dip opportunity you get. This is just sort of that stock that you keep buying on any dip opportunity that comes up. To me, I feel comfortable buying Tesla really under 800. If we start getting over 800, then even in my 5-year estimates, I'm going to start getting a little more like, all right, maybe it is time to finally start shopping for other opportunities. But a nice buy target under 100. If I assume a PE multiple of 100, which is lower than it is now, in 5 years from now, I can expect that Tesla should be trading for somewhere around $1,300 to $30 a share in about 5 years realistically. Though the way the market will actually work is in 5 years, the market will be pricing Tesla based on what it's going to do in 2027 and 2028. So it could be selling for even more, but then again, I am giving it a high multiple knowing that the market is going to price forward. So if you buy Tesla under $800 a share, and we actually hit our 2025 targets, it gets to about $1,330. That works out to about 10.8% return on your money for the next 5 years between here at the beginning of 2021 and the end of 2025. Ideally, I would love to see Tesla dip under 600 again, because if you buy Tesla under 600 and we get to that same 1330-ish in about 5 years, which again, we could get there way faster, but looking at this on 5-year projections, then that would be a much more juicy, like 17% return. So buying Tesla on a dip, yes. Buying Tesla just sort of your daily driver stock to buy when you get paid, generally, in my opinion at least, great idea. I've been doing it for, since 2018 now, and I'm really excited that I've continued to buy Tesla as a daily driver. And again, if there is a dip, buy it on that opportunity. But otherwise, I think this is pretty great news for Tesla. Yeah, did they miss a psychological threshold? Sure, not a big deal though. Super excited about Tesla. I hope you are as well. And folks, we'll see you in the next video.